please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, it's been a decent day for the market today, but midcaps have underperformed. The Bank Nifty move didn't happen at 3 p.m., so it's been rather flat. But 10,460 now on the Nifty. Ashwani, so fair to say that there's a mini sort of breakout which is on after the last 2 or 3 days of consolidation on the Nifty?
Well, it's not a breakout by great margin, A. B, it's not a very widespread breakout, which means that, mid cap, small cap, everything breaks out. So maybe you need to give it another day before playing it like a breakout. But overall, it does not give you that feeling because you are not really taking highs out with any sort of flourish. But yes, we are above 10,430, 450, but just barely. Sometimes these things can fail.
Okay. Prakash, this Fortis issue. Now it's 166 per share that IHH apparently is offering. What do you think and what's your advice to shareholders?
No, so if you already own Fortis and then you need to be really strong-hearted to have bought into it at any stage in the last 2 months. I think it's time to hold because what's finally happening is it's reaching the finality of sorts in terms of upping the ante and the price discovery seems to be something where IHH could upstage TPG Manipal. So my sense is that's kind of close enough like ever before, I mean more than ever before. But if you had to buy now, the risk reward is not so favorable for you. So the day the deal was broken, I remember I was on the phone in the morning bazaar, this slot, and I was talking about saying the stock will react negatively, but you could buy into it, and it gave you a wonderful chance of buying at 124 or whatever. Yeah. So from there you see it's been a significant 30% grosser of sorts. So, but now it's kind of getting into that stage where the risk reward is not favorable for fresh purchases. You would actually wait and book out as soon as you get some news flow which is positive. Okay,
Nimesh Shah is here with us now to give us some feedback from the dealing rooms. Nimesh, been a good day, though midcaps have underperformed today.
Yes, Anuj, the midcaps have underperformed in the last few days. In the sense I'm getting is maybe some of the larger HNI, the super HNI category seems to be offering some blocks in the midcap and small cap. So maybe that pressure is playing out in the midcap and small cap. But today the sector of the day is clearly IT. There were a couple of brokerage notes as well suggesting that the IT index itself is seen as some sort of a breakout, and there could be a big rally in the IT index. In fact, even in terms of a delivery point of view, I understand some of the offshore funds were quite active into the larger IT names before the earnings season. So it looks like it's more of a delivery-based play in the IT names in today's trade. Clearly, that's playing out. Infosys will be a key trigger to watch out tomorrow post markets. But generally, the sense is that not only the large cap are doing, the mid cap IT is expected to do well in Q4. So that's the general sense going to the IT earnings season. Broadly, the market seems to be in a range. I guess on the upside, 10,650 is a level to watch from a very strong resistance from a Nifty point of view. But the broader sense is some bit of pain in the mid cap and small cap, essentially coming in from HNI category, and from an institutional point of view, there is now delivery-based buying both from offshore funds and domestic funds, largely led by IT names, and there is some sense of resemblance or some sort of buying coming back into the financial names as well. But clearly the sector of the day today clearly stands out for IT, and as I said earlier, some bit of pain is clearly visible in the mid cap and small cap.
Okay, all right, Nimesh, thank you very much for that. Well, on that note, we also have Prashant Prabhakaran of Yes Securities joining into the conversation. Prashant, the stocks that I want to discuss with you are Future Group. I mean, we did have a brokerage note. Edelweiss came out with a note on Future Consumer. I mean, stock's been a little excited. Actually, the entire group is excited last few days. What is your analysis, and would you recommend a fresh entry?
So, Ruby, unfortunately, the stock is under our advisory from the Yes Securities IB team, and hence I don't think so I will be able to talk about it at this point of time.
Okay, fair enough. Just want to talk about a couple of more names. Prakash, Balrampur Chini, you reckon it's now going to the same cycle is going to repeat here?
So, You know, I remember we discussed this, that these sugar cycles are fairly long in terms of, you know, the kind of range that they have. Two things, time and the kind of quantum of moves that you see. People tend to run out of patience for the simple reason that the anticipation builds up too fast and things take much longer than that. In this case, what's going to happen is sugar, while the government keeps on reporting about bringing down import duty, I mean the allocation for, you know, export is going up, there is no way you can match the global prices. So when the international prices are skewed unfavorably for most domestic producers, there's no reason why we talk about exports and, you know, liberalizing that. And it's an election year. I really doubt if there's going to be anything which is going to be too negative that will come through, which means most of the sugar prices will continue to be range bound. I don't see any upside from on the farm gate basis in terms of realization. So
that means, you know, potential for more short covering. For last 3 days, there's been quite a bit of short covering from FIIs, so that will continue. I think this mid-cap underperformance is a bit of an issue, and the point that Nimesh also made. I think the jury is out. We're very close to the month of May as well. The jury is out on whether, you know, this now is the zone in which fresh selling would emerge, or, you know, you will just go non-stop towards 10,600. I think that's a call that, you know, I'm not qualified to take. But today's move, I think the bulls are sensing a bit of a breakout right now.
You know, I just wanted to get Ashwini's thoughts as well. Ashwini, so we have sustained above the 50 DMA. We've sustained above this level of, I think it was March 13th or 14th, if I remember correctly, the previous high that Anuj is referring to. Yet we've not seen shorts starting to get worried, at least as yet. Do you expect that? And I mean, tomorrow is also the last trading day of the week. So what do you anticipate?
See, what appears likely is that, and which is my opinion also, that maybe we haven't consolidated enough. So I guess we will probably get back into that 10,350, 450, and more consolidation is needed before, you know, mid cap, large cap, everything goes. This sort of, you know, lukewarm type breakout often does not succeed. So I wouldn't be surprised that, you know, everybody has gotten in on the breakout and tomorrow gets chopped. So that way I'm not very excited with the breakout bit. And if there is a, you know, consolidation for 5-7 days, maybe you'll have a better breakout later on.
Okay, let's just see the stock that's having a bit of a move right now. Just pull out intraday chart of Jet Airways, and that stock, in fact, is at the high point. A couple of other stocks at high point right now. One is Nestle. That's, of course, Jet Airways move. Nestle has moved to high point. We normally don't talk about this stock because it's not that liquid, but for whatever it's worth, it's at high point. Mahindra & Mahindra Financials is at high point. Bharat Financial Inclusion is at high point. HDFC is at high point. So there are a lot of stocks making a move towards the high point. Prakash, before we let you go, what would be your top NBFC bet?
Okay, the top NBFC bet. So I am very positive on housing finance companies per se. And my sense is, you know, group finance numbers will probably set. But I think Indiabulls Housing Finance seems to have made a comeback completely from, you know, a very significant sell-off, and you know, the valuations are also compellingly attractive for this particular name. I would play it safe, not go into some of the very small names, but HFCs is what I would look at very, very promisingly. M&M Financial, of course, has had some other vectors working for it in terms of consumer finance, vehicle finance being so robust for them, and it's completely correlated with the Maruti sales numbers. So, you know, that's one of the big reasons. But I would definitely look at Indiabulls Finance as one of the key picks here.
Okay, all right, Prakash, good talking to you as always. Thanks for dropping by. Well, let's get you some more market opinion. We spoke with Nilesh Shah of Envision Capital and asked him whether he's still bullish on the IT sector. Take a look.
I think you know, it makes sense to remain constructive on the sector. I think the last 2-3 years, the sector itself has gone through a lot of tepid growth, a lot of turbulence, huge changes in the demand environment, pricing pressures. I think all the negatives that you could really flag off have kind of materialized and transpired, and because of which these companies have actually grown in single digits. So clearly, the outlook for the next 2 to 3 years, I think, is very positive on the sector. Because a lot of the new areas, I think, is going to start contributing a larger share of the revenues for these companies. And these companies have reoriented themselves. but it's still going to be a bit back-ended. So I'm not expecting any of these companies to really stand up today or tomorrow and say that we're going to grow in double digits. I still think that the guidance that they will kind of give out is going to be high single digits at best. So one needs to be a little careful not to get carried away. And I don't think, and I still think they're a few quarters away from stepping into a double-digit growth environment. So one needs to be a bit careful there. I think in the very short term, they could have tailwinds from the rupee-dollar equation. I mean, the fact that now, the rupee-dollar is at 65.40, that really helps the margins in terms of the rupee terms. So that could provide some some tailwinds in the very short term. But otherwise, I think from a 2 to 3 year horizon, I still think that it's a sector to be kind of positive on.
But Midcap IT has delivered, in some cases even double-digit growth. Do you think that still has enough niche and that can still do well from here on?
Yes, I think, Anuj, that's really where the big opportunity is within the sector. It's pretty akin to the consumer space where you have the big guys like HUL, ITC who still grow in single digit, but then a lot of the tier 2 consumer names who are in specific niches end up doing well and growing at a much faster pace and at a higher rate. I think technology is no different. Obviously, if you really look at slightly longer term horizon, say the last 10 years, then obviously they have not been able to grow at a faster rate. But the whole world of technology has changed. And honestly, really size is no virtue. So if you are in a specific domain and kind of have solid expertise around that domain, you could end up doing a lot better, growing faster, carrying a much better pricing advantage. And that's precisely what's really happening in mid-tier IT over the last few quarters. And we see this sustaining for the next 2 to 3 years also. So a lot of the mid-cap IT companies who are doing some really nice solid work in a specific domain or a niche, I think they will end up doing much better than the biggies.
The other cue that this market has had to deal with is sudden spiral back up in crude oil prices and what's happening with duties, etc. Your thoughts on both oil marketing companies, and on the upside, if you were to look for plays on crude, there aren't too many in our market, but is there something you'd go for?
I think overall the sector is a clear avoid. I don't think one should really be kind of looking at OMCs at all, given that the next 4 to 5 quarters we are going to be in a politically and an election kind of a period. So in this kind of an environment, that's a sector to avoid, and we really don't see the government or the regulators giving that kind of complete freedom in pricing, which the OMCs can pass on. So I think it's a sector to clearly avoid. But I think on the flip side, some of the engineering companies in this space, they look very good, because higher crude oil prices means obviously more capex in the sector, and obviously therefore more business, more work for them. So clearly within the oil and gas sector, stick to some of the engineering companies in this space. There are talks of some of the other players in the sector who are going to kind of see unbundling of their businesses, and that will unlock value. So some of the gas transmission, gas utilities, I think that's a space to really watch out for versus the OMCs.
What's the consumer durable space looking like for you? It's only consumption stocks that have been doing very well.
Yeah, I think I think the entire consumer space is looking very, very good. I think they've had some bit of a tepid growth environment, but I think the next few quarters are going to be fantastic for the entire consumer space, and more so for the consumer discretionary spend. That's a big kind of an opportunity to really look forward to. The appliances space has turned a bit expensive. Most of these companies are trading between 40 to 60p multiples on trailing earnings basis. So I'm not quite sure as a value investor there's too much of upside in them. But I think the big opportunity within discretionary is basically this whole travel, tourism, hospitality. That entire space looks very, very exciting. Most of the companies here, most of the stock prices have corrected quite significantly in the last few months, and that presents an opportunity there. Some part of pricing power is coming in. There's been a fair bit of consolidation which has happened in this entire space. So I think this entire space called hospitality, travel, tourism, resorts, this entire space looks a lot more attractive versus the consumer appliances space.
Welcome back. We are just about 5-6 minutes away from the close, 5 actually, not even 6, and the market's holding on to about a 43-point up move on the Nifty. The Sensex also up around 0.5%. Prashant, I want to get your thoughts in particularly on alumina and aluminum plays in our market. So that would be Hindalco and Nalco. What would the call be?
Hello. Sorry.
Yeah. Can you hear me?
Can you hear me?
Yeah.
Yeah, sure. So you wanted to know about the aluminium related stocks, is it?
Yeah, Hindalco and
Sorry,
Nalco, given
catch a little bit of it, Surabhi. So if you can repeat it, it'll be nice.
Sure, Prashant, I was asking you about Hindalco and Nalco. Very sharp run-up because of underlying, fundamental price appreciation. Would you still look at buying, or do you think it's time to maybe book some profits?
Yeah. No, it is time to book some profits off. The correction that had happened was again because of the run-up of prices that had happened earlier on. There will be a pickup of demand. This is a short-term call. If you are talking about a long-term call in metals and you're talking about steel, you're talking about aluminium, most of them are hold maybe in a 1 or 2 year perspective. In the short term, because of the sharp run-up, without having a sale demand that has picked up, I don't think so it's a good story to hold on for the future. Maybe you should book your profits at this point of time and end up looking at an entry in case the markets do come down to a more reasonable levels as far as valuations are concerned.
Okay, fair point. Let's take some final thoughts then. Ashwini, the market breadth has not been strong for the last couple of days. Is that a cause of worry, or you think it's just one of those random moves?
Market breadth is not strong because there is large cap movement, and maybe if you take out a few large stocks, the market may not have broken out. So that way I think mid cap is still in consolidation. Large caps have broken out, but just about. So I would think if those large stocks don't move up tomorrow, then we could get back into that range. You can say it's sideways to positive. Maybe the lower end has moved up to 10,390, 400, but the mid cap leaves lots to be desired, and maybe this breakout may not sustain after just 2 days of consolidation. You may need to move a bit more sideways. Maybe the range kind of shifts 10,400 to about 10,500, but definitely this is not decisive.
Okay, just about 2.5 minutes to go. So, Anuj, how would you look at it? I mean, the mid-cap underperformance is pretty marked. Today we've had, of course, I guess IT saved the day?
Yeah, IT was quite good, but I think it was a good day because you have had a, at least a bit of a breakout. It will be interesting to see, Surabhi, if we can build on to this. The mid-cap issue is here, whether it's just distribution or it's the fact that there's buying in large caps, and for now, you're keeping mid-caps on the sideline. I think that question is important as we move forward. For you would want a 2:1 kind of advance decline, not 1:2. That actually is a healthy rally. So we'll find out. But for today, of course, IT really was your big sector to watch out for. HCL Tech up 4%. TCS was up about 4% as well. And in fact, this is what we were discussing long back as well. On TCS, this overhang of promoter stake sale remained for some time, and finally now that is getting over. So 4% move is what we had on TCS. Infosys up 4%, Tech Mahindra up 3%. Then of course you had a couple of financials like Axis and HDFC which did well, HDFC Bank as well. On the way down, metals were down. Vedanta, Tata Steel, Pharma was down. So Lupin, Dr. Reddy's, Sun Pharma. We alerted Sun Pharma actually in the morning as well that it's made a bit of a double top. So that one also was down quite a bit in trade. SBI, Maruti, a couple of other stocks which were down, Surabhi.
I'm looking at the mid-cap action and trying to sort of really dissect it down. So index obviously is on the lower side. But Anuj, I don't know if you talk about the big losers today, it doesn't seem to be quality mid-caps. I'll quickly run through the losers list. You've got the likes of JP Associates, Reliance Communications. Sugar, obviously, I think the market knew it was largely a trading rally. So there's a lot of profit that's been taken off on the sugar stocks, Balrampur, Dhampur, Triveni, even the related sugar plays, all these stocks are down. Again, metal seems to be a case of, a little cool off after things have run up so much. So, for instance, a SAIL, those are the large cap ones. Let's pull up Nalco for you as well, and SAIL is down 2 to 3%. Okay, make that 4% towards the end. Nalco cooled off from the highs of the day, but still ending in positive territory. IRB, of course, had a dramatic run yesterday. Today was a down day, 1.5% up. Of course, the PSU banks were not finding too many takers today. So your OBC, Union, Andhra, Bank of India, we're talking 2-3% gone. Union, Andhra, Bank of India, we're talking 2-3% gone from most of these stocks. So that's the broad range that we're looking at. Gas stocks have seen some more pressure. So IGL and Gujarat Gas, about 1.5-2% gone from these stocks as well. The big name from the consumer side that came under pressure today definitely was Bata. So you can't entirely ignore that. Adani, and if we're talking about big market cap losers then on the mid-cap side, then Adani Enterprises was a stock on the downside. Rain Industries, Goa Carbon numbers were a bit of a sell trigger, so that stock was also on the lower side. Now, however, if I talk about the gainers, there's some interesting, patterns here. Tata Sponge, Tata Metallics were throughout the day very, very excited. 7.5% up on Tata Sponge. Tata Metallics about 4% on the higher side. We have seen some buying on Hathway, Dish TV, of course. Dish about 6-7% on the upside. Hathway about 4% on the upside as well. The entire Future group has been buzzing. Future Consumer, Future Retail. So these stocks are up between 3-4% as we look at it. Fortis is obviously news-driven. Harrison's Malayalam is news-driven, 10% circuit on Harrison's Malayalam. And finally, there is no going away from mid-cap tech. That really continues to be the key focus ahead of earnings. So your Tata Elxsi, Hexaware, most of these stocks, NIIT Tech have managed between a 2 to 4% kind of an up move. So a lot of mixed trends in the mid-cap universe once again today.
Oh yes, mixed trend is what we had, of course, in the mid-cap space. Let's take some final thoughts then. Mitesh, what's the call on index from here then?
So, it looks like it will not be a big breakout, but more of a shift of range. So maybe, the momentum was lacking in the sense that while we had some traction in the IT stocks, the rest of the pack kind of failed to flatter to deceive. So 10,400 now becomes your important pivot on the downside, 10,430 to 400 zone. And on the upside, I think, we might head towards 10,550 or thereabouts and trade in this range of about 10,550 to about 10,400 broadly for the next few days to come by. So it's been a small move up, but not that kind of breakout which should happen after 3-4 days of sideways consolidation, and then you would have seen a stronger closing than what we have had today. Maybe it's because of the bank expiry, but for the time being, I think I'll not be very enthusiastic, but yes, still maintain that positive bias which we have had for the last few days.
Prashant, if I remember correctly, last time we spoke, you were actually saying that you'd probably advise people to be a little bit on the cash side of things. Is that still the call, or have you found some interesting stock ideas? Anything you'd like to leave our viewers with?
Yeah, Surabhi. Surabhi, the call still remains to be in cash in some portion of your portfolio. There are stock ideas which keep on coming about. The latest that has come about is Bharat Forge from our desk. Clearly the largest forging company in the world. You have a large pickup that is there in the commercial vehicle space that they operate in. The European and US markets, which also form nearly 40 to 50% of the entire portfolio, is also doing well. So apart from these are all select stories that are there. Overall, from an overall Nifty level, we are still not confident that we are ready to end up having a new look or a new high in the Nifty in the near term.
Oil prices hit their highest level since 2014. CNBC TV18's Anshu Sharma caught up with Oil Minister Dharmendra Pradhan on the concerns that this raises for Indian consumers.
Certainly, when in international arena market price go up, it concerns India's policy maker because it pinches our consumer. That is the reason, very candidly, Prime Minister appealed to the world energy producer. Yes, we don't want a very low oil price, but it must be responsible. Why there will be such a price hike? What is the reason? Financial market, sentiment, all these are fine. But ultimately, affordability of common consumer is an important issue in Indian policy, public policy. That is the concern we have, and very categorically, Prime Minister rightly emphasized that issue yesterday.
OMCs have ruled out that government has asked them to absorb 1 rupee per litre on petrol and diesel, and the government has ruled out any excise duty cut. So how is government going to reduce the burden on consumers considering the petrol and diesel prices are going high?
Let us see, wait and watch, because we never interfere the day-to-day pricing mechanism of companies. This government consciously to looking into the long-term interest of the consumer of this country. If we continuously control our pricing mechanism, no new investment, no players will come to in the retail marketing. Unless until more players will come to retail marketing, there will not be fair competition among themselves. On that principle, we never interfere in the day-to-day price mechanism of companies. It's up to them. Yes, as I said, high price is a challenge. Government is watching the scenario. Let's see.
Is there any room for excise cut?
I am not in speculation business.
Okay, so he's not willing to give too much detail on that just yet. Now, on the sidelines of the International Energy Forum, Anshu also caught up with Prabhat Singh of Petronet LNG and asked him about the impact of the PNG RB's draft regulations on the LNG sector and the company in specific.
Even today, our terminal is basically like a common carrier. Any volume which we are bringing today within the country is not belonging truly to you, because we are passing it on to all the oil marketing companies, and we don't even make a cent on that. So virtually our 100% terminal is today working on some third party utilizing it. Okay. So it will continue with that. Within that, if somebody says only 20%, I really feel that I am offering 100% on that account. Okay. So not an issue on that.
So what are your views on issues like government allowing open access to LNG terminals? Will there be any possible oversight on regasification margins?
No. I think because today the situation is that we are running short of LNG terminals, regasification terminals. And as the demand is going to go up, more and more terminals are needed here. So all the terminals which are today available, they are anyway should run chock-a-block, I feel.
Will this impact your monopoly in
No,
any way?
why are you saying monopoly? There is no monopoly, ma'am. We are one of the terminals who's doing good. That's all. There is no monopoly as such.
There's also city gas distribution bids happening from today. Will you be participating in that? Because
Yes, we are looking at those options now, and we are trying to evaluate that if there is some city which looks good for us, we would try and see that we diversify into the market. And
what will be the strategy? How many districts?
We have not yet worked it out. We are still looking at it, but we would be keen to look at districts, etc., offered around our terminals, because I strongly feel that as going forward, even LNG is going to become fungible in the city gas.
Okay, that's Petronet LNG. Now, in what is a first step towards a leaner Tata Sons under N. Chandrasekaran, Tata Sons announced the formation of one company for all the defense-related businesses of the group. Nisha Podar, who broke that story several weeks ago, now gets us the exact details.
It's a significant step taken in the cluster formation and for a leaner and more structured Tata Sons as an organization under the helm of N. Chandrasekaran. Now remember, the defense business, that is a critical one where group entities with defense play would really give up their defense businesses, and it will come under one roof, that is Tata Aerospace and Defense. Now we did report it earlier, and now it's been announced, and Tata Power, remember, had also announced that they are going to sell their non-core SED for about 1,040 crore rupees of initial payment to this defense business. We do gather that Tata Motors could be next as well, with a part of their defense business going in for close to about 800 crore rupees in Tata A&D as the powerhouse of defense play for the group. But remember that we do gather that Tata Motors is going to retain a large part of the specialized vehicle business for the defense sector, which is more revenue generating.
All right, Nisha, thanks very much for that. Moving on to a corporate conversation now. It's not just FY19 that's going to be a good year for Titan. They're actually estimating growth of about 15 to 20% growth rates for this year. But the formalization of the economy post-demonetization and GST will mean robust sectoral growth in the coming years as well. That's the word coming in from Bhaskar Bhatt, MD of Titan, in an exclusive conversation with Nitya Balakrishnan. Take a look.
We look forward to a very good year and several good years ahead, primarily because of the formalization of the economy, post GST, post demonetization and so on. The impact has been extremely good thanks to that in the jewelry business, because it's a very large business where we have low market share. But we've seen that in watches and eyewear as well. We are seeing growth in basically consumer sentiment is also turning positive. It's been positive for a while from Diwali onward. And we expect to grow at a rate much like last year that we grew across our businesses.
15 to 20% kind of.
Yeah, it should be possible, yes.
All right. If I can talk to you about investment into retail stores and retail expansion, do you have any plan or roadmap, say, for the next 2 years? What kind of annual investment into retail expansion do you see, and a number of stores?
You see, our model is one of franchising plus company stores.
Sure.
So we typically open 100 to 150 stores in a year, but they are not all company stores.
Absolutely.
This is a company store. So you should look at the number rather than the investment. Now, per store, the interiors vary from 1,500 rupees a square foot to 5,000 rupees a square foot.
Sure.
So the company budget may be very low, could be 40, 50 crores. The total investment may be 100 crores. But the point is to locate, to find locations where you can open stores across formats. So it will be an aggressive expansion for the next year, for the current year.
Would you look at more mergers, more acquisitions in this front? Because you did mention CaratLane. You also recently invested into, a smartwatch technology company.
We are exploring possibilities of capability building.
Sure.
So where we can do it internally, we would. Like we started a digital function in the company all of our own. But some where we feel we can grow faster by investing, we've done that. Like you notice the investment we made in a technology company for smartwatches. So that effort will continue, much like CaratLane, and wherever we see opportunity for capability building, we will do it.
All right. One quick question before I move on to market share for the categories. One of the recent launches was under the band of Fast Track Reflex, which is a more affordable Fitbit or Garmin or exercise watch for India's youth. How well is that brand performing, and what is the outlook on the same?
It's done exceptionally well. First of all, Fast Track itself has done extremely well, and that's also because of the youths in India are aspiring for brands and so on, and the Fast Track attitude is what they're buying into. But particularly Reflex has done extremely well because it's great value for money.
Sure.
And coming from the house of Titan with the Fast Track branding, it's that value multiplies compared to a lot of...
Let's start commodities now, where we have seen a lot of movement coming in. The crude oil prices, which started the day on a positive note, up by nearly 0.5%, have given up some of those gains, and the metal prices, which in any case started on the weaker side, have seen some more pressure come in, especially for the zinc prices, where we are trading at a 4-month lows. So it has been quite volatile as the day, and remember, the US session is yet to open, and where would that lead us? What are the cues looking like? For all of that and more, let's get in Thomas Pugh, who's commodities economist at Capital Economics, and he joins us on a phone line. Thomas, hi, good to have you. How have you been reading the commodity markets, really? There's so much happening in the global markets in sense of currency, geopolitics. The whole import tariff is how we started this week with, especially for the crude oil prices, where we are up nearly 7% for the week. Where do you see the prices head on from here?
Yeah, so the latest surge in oil prices certainly has been driven almost entirely by geopolitical concerns. Escalating tensions in Syria between the US, Iran and Russia make it more likely that the US will reimpose sanctions on Iran in May, when that next comes up for review. The sanctions, the US sanctions on Russia, which were announced on Friday, so they don't curtail Russian oil exports directly, but they certainly add to tensions there. Throw into the mix the alleged chemical weapons attack over the weekend, and that heightens the chance that the US will either impose further sanctions on Iran and Russia, or there may even be some sort of military conflict which has the chance to escalate. And then just yesterday we saw there was another missile attack from Yemen over Riyadh, where those missiles got intercepted. The Yemeni Houthis have really started to target Saudi Aramco's infrastructure in the region. Earlier this month, there was an attack on an oil tanker in the Straits of Hormuz. If any of those are successful, then that could have a serious impact on supply.
Thomas, what is your sense on where are we headed from here on? Because when you look at the demand situation, that seems good. Longer term supply, the markets do believe that the conventional supplies would continue the decline there, or control there could support prices. So when you look at the US shale output on one side, and when you look at the geopolitical tensions on the other, and then of course on what OPEC is trying to do with supplies, where do you see and how do you see the crude oil prices reacting?
So, given that the latest ramp up in prices is more or less purely based on risk premium and geopolitical tensions, and given that investors, the investor positioning, investors' net long positions are close to record highs. If there is a sign that these tensions are coming off, we could see prices fall back quite sharply. On the fundamentals side, we still think that the market is likely to be oversupplied in the second half of next year, and the prices where they are kind of Brent above 72, WTI at 67, is only going to encourage more US supply to come back onto the market, which just exacerbates that oversupply that we're going to see in the second half of the year. So we really think that prices are going to fall back by the end of the year, and the risk is that we get a very sharp fall in prices if these geopolitical tensions ease and investor positioning starts to come off.
So what you're saying is that we are not perhaps going to hold around these levels, and what kind of a range would you see for the rest of this year now?
I think certainly between 70 and 60, like we've had already, and then the second half of the year, I think it would be moving into a range closer to 60, 65. Assuming that these geopolitical tensions ease and there aren't any actual physical attacks on oil infrastructure or a serious conflict in the Middle East between any of the parties there, that would change things. But for now, prices lower by the end of the year.
Sure. Thomas, before we let you go, a quick word on the metals as a sector as well, where there has been a very sharp decline today. The seasonal demand pickup has been slow, and zinc clearly seems to be the most impacted.
Well, we've certainly seen aluminium up a huge amount, given the US sanctions. But this may well be more of a temporary boost to prices over the next 6 months. It's not clear that the sanctions will result in Russian output actually falling that much, especially if it can get around them by selling to Asian countries who perhaps would not be so concerned by the US regulations.
Point taken, Thomas. We'll let you go at that. Thank you so much for joining us. So that's the view really coming in for the crude oil prices. The first half perhaps can see some support. Second half could be under pressure because of the higher US shale output. T. Gnansekar of Comtrends as well joins us now. Gnansekar, what is your sense for the metals as a sector? Because that, of course, has been very, very volatile. I mean, we've been talking and you've been saying that we are still not closer to the bottom. From these levels, how much of a further decline can we anticipate?
I think, we're nearing the bottom, but, it's still not actually hit a bottom as such, because, the first sign of a bottom only comes when you look at technical indicators, which do not, at this point in time, indicate any sort of a technical bottom at this point right now. So, purely going with the technical side, I think another 5% or at least 5% is a sort of downside from current levels across the board. And copper could be much more than that, or possibly even 10% in copper.
Okay, so clearly no respite, and we are looking at 2 to 4% of a cut coming in for many of those metals right now. But how would you look at the gold prices? Because yesterday was a strong day. We are not too far away from those 11-week highs, but unable to hold, making higher highs, no complaints there. How would you want to treat this one?
Well, in an environment like this, when you have all sorts of news flows, it's an ideal safe haven. But you're right, it's not seeing that kind of a follow through, which typically is seen when you have safe haven buying. That's a big worry. But at the same time, this is one asset which you would like to be parked in at this point in time when you have so much of issues. So clearly gold is taking the lead, but let's not forget silver is a sleeping tiger. So you need to be aware of that, and anytime soon you could see some kind of an explosion in silver.
A very quick one again. Is 1300 coming first or is 1400 on your radar before we see that one?
I think we've seen a breakout of 1355 on a technical basis. So that sort of gives hope for a follow through up to 1395, 1400 levels.
Okay.
And if there is this, geopolitical tensions coming down in the next couple of weeks, which doesn't look like, then it might come to closer to 1300. But we've seen in the past that even rate hikes haven't bought prices below 1300.
Sure.
So clearly there's a lot of support in that zone, and more chances that it will break higher and go towards $1,400.
Valid point and analysis there. Thank you so much, Gnansekar, for joining us and giving us that sense. With